Good day, ladies and gentlemen. It is Wednesday, February 23rd, 2022. Kind of interesting out there in the world, but we're not going to be talking about that stuff. I'm sure you're getting your fill. We're going to focus today on Vox Royalty. It's a royalty company I've followed since it listed, what, 2 years now? Something like that.
Yep, coming up on 2 years.
Yeah. And, good company. They got a very unique approach, I think, compared to a lot of royalty companies. They came into the space basically by acquiring a very, very large database and creating a larger one on their own over the past few years of largely privately held and I guess you could say not visible to the market potential royalties, and they've been doing deals on those ever since. They've pulled a lot of royalties together, and they're starting. This is starting to come to fruition. They're getting royalties now from several of these, and I've got the Chief Investment Officer Spencer Cole here. Spencer is going to bring us up to date on what's happened with the company since MIF last month, but we'll also kind of look at the broader investment case, if you will, for Vox. And as you can see on the slide in front of you, Vox trades on the venture. VOX is a symbol, and on the QX in the US, VOXCF. Very tight stock, good cash balance. It's a very well put together deal when you look at the structure. But enough of complimenting Spencer. Let's ask him what's been going on for the last month.
Yeah, thanks for that introduction, Eric. We certainly haven't been sitting on our hands since MIF. We've been very busy on a number of different fronts. I guess one of the first key updates I wanted to share since MIF has been we made a major acquisition over a really exciting platinum group metals royalty called Limpopo. This royalty asset, it covers approximately 50 million gold equivalent ounces in the ground. The mine and the concentrator have already been constructed. It's a past producer that's owned by Sibanye. They recently completed a feasibility study looking at restarting the mine as recently as 2020. So it's within their sort of advanced project pipeline, and with very credible restart potential. We see this as being a generational asset that has potential to produce longer than even our management team will be around for. So just a really exciting royalty acquisition where we're able to sort of be quite clever, I guess, with how we priced the deal and how we sort of structured the consideration to share risk with the royalty seller. So that's probably one of the most exciting things that we've been up to since we last spoke at MIF.
Now, can you go into the structure of the deal? Maybe show us that in a little more detail. Because somebody hears that big a number in terms of the the contained PGM gold equivalent resource.
Yeah, sure.
And the first thing you ask yourself is, what's the motivation for the seller? So what have you negotiated that makes this make sense for the seller?
No, absolutely, Eric. And as we know, if something sounds too good to be true, then maybe it is too good to be true. But so I'll go into a bit more detail there. Look, the seller is a South African explorer and prospector, and was getting to a stage in his life where he was looking at estate planning, wanted to be able to sort of, I guess, transfer some wealth within his family, and then also getting exposure to a Canadian dollar denominated stock like Vox Royalties stock. He saw the potential for our stock going forward. So straight away he elected to take 100% stock, and also he agreed to quite a considerable lockup period because he saw the potential for a re-rate in taking our paper. So the headline consideration is 10.4 million, but the upfront portion of that is 1.5 million dollars worth of Vox stock, and then the balance of the consideration is linked some production linked milestones. So a very sort of attractive risk sharing, such that Vox shareholders get the benefit of the near term restart of its operation without having to sort of take on that risk up front. But look, this is quite typical for the type of deal that's right down the middle for us, Eric. Creating a liquidity event for a prospector, who has, particularly is focused on estate planning needs.
Well, and for those who aren't, familiar with Limpopo, I think it's probably worth explaining to people that the infrastructure situation here is extremely positive. I mean, Sibanye has, they basically have a mill there. I think it's under a lease now, but this isn't. But from the looks of things, I don't. I mean, you've seen the feasibility study. I assume I haven't. This is not like a really high capex proposition for them to get this going again.
No, you're absolutely right, Eric. So the concentrator and the mill is currently being used. So I think last year the mill produced about 120,000 PGM equivalent ounces, and it's on a short-term lease with Anglo Platinum. So what we're hearing is that Sibanye is obviously looking at taking back that the mill from that short-term lease, and looking to restart this as a Sibanye operated sort of mill and underground mine. The underground mine's been well maintained, and as you said, very low capital intensity to restart this significant operation. So just everything on every sort of deal metric or an aspect, this deal stacked up extremely favorably, and for $1.5 million of stock up front, brokers benchmark the value of this royalty 25 to 32.
How does the PGM, if you will, break out in terms of the resource? Is it predominantly platinum or palladium or?
Yeah, so it's predominantly platinum and palladium. So it's about 75% platinum and palladium, and then there also is an attractive amount of the third and fourth metals are rhodium and gold, but then it also has nickel and copper, as byproduct metals that were historically produced as well. So a really attractive, basket of precious and sort of battery linked metals.
And, looking at something like this, it's a very big resource. Timing's not guaranteed, obviously, when it starts up, but it sounds like it would make sense for them to get going on it again, or, alternatively, somebody else buys the whole thing. But, with that big a resource and that long a mine life, what sort of, and that annual production that you mentioned, Sibanye was doing on behalf of the platinum guys, is that kind of in the range of what you expect Limpopo itself to produce if they started mining it again?
So it depends partly on, I guess, how they sequence the restart, but we would expect somewhere in the order of sort of, call it 90,000 ounces to about 120,000 ounces, somewhere in that sort of snack bracket would be the potential annual production out of this operation. And so, when brokers reviewed this deal, they said, well, they see potential for, based on that sort of production range of somewhere in the order of about $3 million a year of potential royalty revenues, that would be attributable to this royalty.
So you're now not, that's, you're talking now up around 20, 30 million, I would think anyway.
Yeah, that's based on broker numbers. Yeah, now they benchmarked it about that sort of level.
Okay. Well, that's a pretty good deal for 10.5 million, with 9 of it being contingent on the thing actually getting started and generating cash. So, it looks like a great deal. Can you give me some idea of what's, maybe what's in the pipeline in the nearer term? I read your last update from a couple of weeks ago, and it looks like there is, they're not tomorrow, but there's a couple of things that are pretty far down the line now. And maybe also tell viewers how many royalties you have how many royalties you're currently getting revenues from? Because I mean, there's obviously some strength in numbers and diversification.
Yeah, but no, it's a great question. So I guess looking at our current portfolio, we have 55 royalties, of which 5 are currently in production. And then there's an additional 17 that are in varying stages of development, from construction through to, advanced engineering studies. So,
Okay,
we're on track to finish this year with about 8 producing properties, royalty properties. And then by
right.
the end of 2023, we think that has potential to be somewhere in the order of sort of 10 to 12 producing royalties. So we're right on this sort of the midpoint of this, exponential growth curve in terms of the number of producing royalty properties that we have, which, a really exciting time for the company's history.
Okay, and can you give us a sense of where your top line's looking at now? I mean, I know you haven't put out guidance yet, but you're looking.
Yeah.
It's like 5 or 6, I guess, this year, something, give or take, in
Yeah.
that area.
Yeah, brokers have us in that sort of range, Eric, around the sort of $5 to $6 million top line range, and then further growth on top of that in 2023. So, as with a lot of construction of any new operation, there's probably some swings and roundabouts there,
Yeah.
in terms of which months certain projects come online, but we're just currently finalising our formal revenue guidance for 2022 at the moment with our operating partners. So we'll have more to share with the market, over the coming weeks on that.
Okay, and going forward, I mean, I know you've got a decent cash position. I mean, one of the attractions that Vox has always had is you structure with a very tight equity structure. Is your sense that you're getting to the point now in terms of number of producing royalties and cash flow where if you were going to go out and do something, large, whatever your definition for the person's definition for that would be, that you'd be looking at leveraging the balance sheet rather than predominantly equity? Or, I mean, have you guys thought about how you think the mix is going to look?
Yeah, it's a good question, Eric. So I think the short answer is we are looking to put a credit facility in place. So we have had discussions with a number of credit providers. So I think, in the case of us acquiring cash flowing royalties, our preference would be to debt fund that. Particularly because we think we're still, considerably undervalued based on where our portfolio should be trading to. And then I think, with some of the prospectors we're in advanced negotiations with, a number of them continue to be very interested to take our stock, and in a lot of cases willing to be locked up, for multiple years. So where we can align with partners like that see the potential for Vox's sort of value creation, we will be selectively including some stock in certain deals, but I think credit is definitely the preference for cash flowing royalties.
Okay, and do you want to maybe to sort of close this off, we could talk a little bit about the more general investment case, if you will. Before I turn the camera on, you were talking a little bit about royalty companies and an inflationary environment, and maybe you want to run through that as well.
Yeah, absolutely, Eric. So I think, everyone knows inflation's rampant at the moment. And, I think it's crazy to see the US at inflation levels that historically Zimbabwe has flirted at, 7+%. Is sort of seems like we're on the other side of the moon from an inflation perspective. I think for generalist investors that aren't that familiar with the mining royalty industry, as you get sort of cost push inflation in all your input costs, and then as commodity prices respond to that, most royalties are typically revenue linked royalties. So, and most royalty companies, have got, basically have fixed sort of operating costs, very sort of pretty standard G&A. So, you get this margin expansion during inflation periods for royalty companies in terms of their operating margins. And we've certainly seen that as the commodity prices continue to ramp up with cost push inflation, and our
Right.
costs stay relatively flat. We view mining royalties as probably the best way to hedge inflation risk in the market. And so, yeah, I think that's what's really attracted a lot of generalists to Vox over the recent months, is just the fear of US inflation, particularly.
Okay. And yeah, I hadn't given it that much thought, but I could certainly see South Africa is probably one of the best examples. That there's certainly a few places in South America, say, where basically getting a royalty, be it, and the royalty vendor either getting stock or getting payments, where you're taking their currency risk away by giving them, Canadian/US listed stock and/or Canadian/US
Yeah.
streams going forward. I would think that's pretty attractive for a lot of these guys that are worried about basically seeing their net worth evaporate as their country's currency does. I could see how a South African guy would be pretty worried about that, for instance.
Yeah, you're absolutely right, and it's hedging that FX risk, as you mentioned, but then also just mitigating that single asset risk. I can't begin to tell you how many prospectors that hold a single royalty that we speak with, and they say, "Well, you guys have got 55 royalties. I'd much prefer to balance my risk out across 55 separate mining assets rather than just literally betting the whole farm, and in a lot of cases their family's farm on that one single royalty property." So the fact that royalty companies offer you sort of or mitigate that single asset risk is yet another reason during these times why people are sort of clamoring for royalty stocks.
Okay. So do you want to give, just sort of as a closer, do you want to give us sort of a general, here's why you should buy my stock?
Sure.
To put it in its base terms.
Yeah, sure. I'll jump to our last slide. Look, I think Vox is at a really exciting stage in the company's history right now, Eric. And you've been following us since we went public in May of 2020. And look, full disclosure, as you'll remember, one criticism when we went public was we only had one producing asset, and a lot of investors said, "I can't really get that excited about a royalty company with one producing asset." But we made the commitment to investors, and we've delivered on that commitment that we've been buying assets that are right on the cusp of production at very attractive prices. So we now have 5 producing royalty assets. That's set to organically increase to 10 and north of 10. So investors buying in today are really getting in on the ground floor on a portfolio that is rapidly maturing, and sort of cash flow continues to follow that. So, significant growth in producing assets and revenue. That's sort of the first message. And then, I think in terms of, I guess, our focus on new royalty acquisitions, that Limpopo deal should be a clear example that, we're continuing to use, the world's largest royalty database that we've built in-house to find these really attractive investments that offer our investors just huge amount of upside when they're acquired at very disciplined prices. So, I'd say as we continue to execute further acquisitions, that value creation will continue to accrue to investors. And then beyond that, I'd say a third reason to really look at a company like Vox right now is there is considerable amount of consolidation going on in the mining royalty industry. In the last 12 months, there have been 3 separate junior royalty companies that have been acquired, and a 4th company that's subject to an ongoing hostile takeover offer. So everyone is talking about industry consolidation, and acquirers are looking for companies that have characteristics very similar to Vox. A critical mass of 50 plus royalties, huge amount of growth in revenue and producing royalties, and a significant amount of leverage to the drill bit. So we wouldn't be surprised if Vox is sitting, on a number of acquirers' watch lists at the present point in time.
Right. Okay. Well, I think that brings everybody up to date. Like I said, Vox is very well structured. I mean, if you take a look at a chart, you'll find it's probably been a more comfortable hold than a lot of other stocks in the space. It's not a moonshot, but that was never really the point. The point was to give these guys a chance to build this group of producing royalties and increase the revenue stream, increase the portfolio effect, which just kind of adds to NAV going forward as you get more and more royalties, and your odds of being sidelined or smacked upside the head by one thing going wrong in one place get smaller and smaller. There is definitely leverage to size in this business, and you guys have done a great job of just adding stuff and adding stuff and adding stuff from day one. I think it shows in the stock, and I think it's going to continue to show. And I do like the fact that it's so tight and so well structured. It's not like the market needs to buy 20 million shares for Vox to have a very, very, very good year. It's an extremely tightly structured stock, so it doesn't really take a lot of incremental interest to really get it to start to move. And I think we're seeing that the way it's been trading over the last 2 or 3 months. You definitely, it looks like you're starting to get some momentum here, which is great. I mean, I know you guys have worked on this for much longer than you've been public. This isn't an overnight success. You've been working on this for several years now, so
yeah.
Things look really good, Spencer. I mean, it's a happy hold for me, and I think it'll probably continue to be for some time. And I don't think it's certainly too late for anybody to get in. There's lots of room still.
No, thanks so much, Eric, and we appreciate your support. And we're excited to welcome new investors onto the Vox royalty adventure. We own 15% as management, so we're completely aligned with investors. And thanks so much for your time and for investors' time.
Thanks very much, Spencer. We'll see you again soon.